All right, folks, we're looking at the euro dollar. This is our New York session, and we're going to be focusing primarily on the consequent encroachment of the daily fair value gap. You can see the 1 minute chart on the left hand side and the 5 minute chart on the right hand side. I'm going to annotate the 118.40 and 3 pipettes level. That's this right here. That's the daily fair value gap consequent encroachment level. The market's trading down into that level there, and we were looking for the continuation of the dollar weakness. So we're seeing a drop down into a discount for euro dollar here. And what I want to see is I want to see it snap back above consequent encroachment. And there's going to be several levels in here that's going to have my interest. The high formed at just underneath the 118.80 level. Notice how we had that high and then we sold off a little bit. Then we moved into consolidation, creating a smooth little area up in there. That's interesting for me. Then the sell side imbalance, buy side inefficiency. Then there's a small little area around that 118.55 level, just above that, where there's buy side liquidity as well. All right there, have a nice little surge lower, seeking any liquidity that would be resting just below consequent encroachment. Now I'm going to speed this video up in different parts, so that way we're not doing, obviously, a 3-hour, 4-hour long session on the New York price action, but I want to see price start to trade higher here. Now notice, if we trade back above with a large range expansion, not that we're looking for a quote-unquote engulfing candle, because that's not really what it is, but I want to see it trade above the largest down close candle that's most recently made, not that little small one, this one right here. If we trade above that, that becomes a bullish order block. And a potential bullish breaker if we continuously trade higher. Now we're focusing on that run into that 118.75, 118.70 level, in between there. So essentially about that 118.73 level. Okay, so now we have a potential bullish order block now. And my eye is trained in on that potential bullish breaker. I'll annotate the chart when it gets important to note. Now if we drop back down into that bullish order block, that's a potential buy, and we're aiming again for that buy side liquidity pull up here in that red rectangle. So there's buy side liquidity resting up there, and we're trading right inside that bullish order block. So we want to see range expansion, and we want to clear the bullish breaker. That's that big green candle. So if we leave that, in other words, if we trade above that bullish breaker and we trade back down into it, that would be another opportunity to be a buyer. So right now, we've seen the first initial low risk buy, because this is basically a short-term market maker buy model for a bread and butter setup for about 20 to 25 pips. Okay, so far yours is hanging out inside the range that makes that bullish breaker. It's not a breaker until it trades above it. Okay, we're going to be focusing in on that 1 minute chart on the left hand side now. Notice how we've extended up into that range that's defined by that 5 minute bullish breaker, the shaded blue area. And notice what it looks like inside that 1 minute chart. So that 5 minute candle on the right, we've extended up into several 1 minute candles on the left hand side, as you would expect, obviously. But the price action is more defined relative to that 5 minute chart. And notice the short-term low that was formed right before 6 o'clock in the morning. And we essentially traded about 10 pips below, forming the low. So far, price is creeping up. All right, if you look at the 1 minute chart here, notice what you see here. You have a bullish order block and a fair value gap. Now, if you don't see it, I'll annotate it for you. But if you don't know where it is, pause the video, that way you can study it and look for it. Short-term low on that Euro-dollar 1 minute chart. There's sell side liquidity resting below that. Okay, see what we just did there on the 1 minute chart. Okay, it's digging into that sell side liquidity pool. Okay, right in there. And you also have a bullish breaker, bullish order block, and discount fair value gap. Okay, so I would expect price to expand from this range here. So we can zoom out and start watching it flesh out. So in other words, the bullish breaker is that 5 minute breaker that I outlined and shaded in blue earlier, in case you're wondering. If it doesn't look so clean to you on that 1 minute chart, it's because I'm referring to the bullish breaker on the 5 minute chart, but the fair value gap on the 1 minute chart and the sell side liquidity pool that was swept on the 1 minute chart as well. So I want to see range expansion on the upside and attack that short-term high formed on that 1 minute chart. So far, so good. Now I like that right there, what it just did. It tried to go down a little bit when the next candle's opening, and we started to see some range expansion. We're picking up orders, and the algorithm will want to expand, reaching for that short-term buy-sell liquidity pool. Now, right away, you should see also that down close candle and a fair value gap. That could potentially be another opportunity to enter. So assuming we didn't buy at the 118 mid figure the first time it traded down into it, that could be a potential opportunity should it trade there. If it doesn't, then that's fine. It's a breakaway gap. But if it does trade back down to it, that would be a buying opportunity. And I would feel comfortable with it because it's traded down into that sell side liquidity pool around 8:30 and then filled up previous fair value gap and bullish order block. So it should have no fear associated to it because now you have structure in behind the trade. If that 5-minute breaker is what it is, then it should support price. Now, I would still take that bullish order block and fair value gap if it takes that short-term high out, because it would act like market structure being broken to the upside. Looks like it wants to come down and grab it first before breaking that high. And that's just as well. There's the fair value gap and bullish order block I'm referring to. That would be a buy right there. Your stop will be just below that short-term low at that previous 118.50 level. So basically, you can put it a stop at like 118.45. Might want to stab a little bit deeper into that order block, but keep that short-term low. All of this is a buy right in here, though. You could be a buyer all throughout this price action. Nice return back into an order block. And now I'd look for large ranges to form because we're in small ranges right now. And I'd prefer to see them expanding on the upside. Look at that. It just swept those short-term lows, that clean level. Now it should rally hard. That's what we're looking for right there. Now, it's not a lot of pips. It's the tape reading aspect is what I'm highlighting here. Knowing what you're looking for, how it should react, how it should behave. Okay, trading back down into a breaker. It should run higher now. Very nice. All right, so now we have another 2 down close candles and a fair value gap. So if it doesn't run to our 118.70 level and it can retrace back down in, we'll be taking out another short-term low, essentially around that 118.55 level, and filling in a fair value gap and bullish order block. And that would be another buy. If it just keeps running, then obviously that's an area that we will consider because it needs to trade to that level first. So notice we have some upside still for that sell side imbalance, buy side inefficiency on the 5-minute chart, and we have those relative equal highs are essentially around that 118.73 level. So you could have taken partials as we ran up into 118.62, 118.60. Looks like we might get it drop down into that 118.50 level again. But that short-term low on the 1-minute chart at 118.55. Yeah, not 50. 50 would be too low. So we got that bullish order block, fair value gap. Not this one here. I'd like to see it trade below that short-term low and grab the next order block and fair value gap. And the reason why is because it's more orders that it would be grabbing by going down there. It's not that it's selling off because of sellers, and it's not dropping because it's a lack of buying. It's the algorithm delivering to an area where interbank traders will go in and engage because they know that there'll be counterparties there in the form of retail traders. Now I'll highlight the order block and fair value gap. This will be on the 1-minute chart. Now, even though it looks like it's topped on that 5-minute chart and it's reacting with a willingness to want to go lower, it's just likely going down into that 1-minute chart to pick up that order block and the fair value gap. And notice that we already had, and there you go right there, we already had a relative equal low swept right before that most recent rally higher. So my focus is now around that 118.70 level and the liquidity that would be resting just above that, because that's essentially that smooth little area on the 5-minute chart. Too clean. So I want to see it ramp up and accelerate, and obviously the playback is sped up here just for brevity's sake. Okay, and that would be a partial there. So all in all, that's already a nice little bread and butter trade. But I want to see if it can sweep up a little bit more, because essentially all that's done is completely closed in the sell side imbalance, buy side inefficiency. I want to see if it can run to the buy side liquidity resting above those relative equal highs on that 5-minute chart that I noted at the beginning of the video. When it's this close, you just got to leave a little bit on still to see if it can reach up in there. Now it's essentially 10 minutes, well, not 10 minutes yet, but almost 10 minutes after 10 a.m. New York time. So we're fastly approaching London close. We're essentially in that profit-taking hour between 10 and 11. But I like to see if it's creating equal highs like this on the 1-minute chart, and we're so close to a 5-minute buy-side liquidity pool, I'm willing to hang on to see if we can get into that 11 o'clock, maybe 11:30, to see if we can spike up into that. Price is hanging around that 1-minute chart, and this is distortion by time. All it's doing is marking time, and as we get closer and closer to that 11 o'clock hour, it'll be more likely that it spikes up above those relative equal highs on that 5-minute chart. Not needing to go above, but it could go above that short-term high on the 5-minute chart, taking out the 118.80 level. But I'm more interested in the smooth relative equal highs that was formed just after that short-term high was formed, just under 118.80 on the 5-minute chart. Okay, we're zoomed in here. We're just going to watch the delivery of price in here. And that's it. that would be where you would close your trade as it runs up into that relatively equal highs. Now, because of time of day, it's essentially 10:55 almost at this moment. So we're not interested in trying to see much more in terms of the daily range. It could deliver, obviously, but we want to be out of the market predominantly, or at least the bulk of our trade that we've assumed on longs should be moved to profit. Stops could be rolled to 118 mid-figure, or basically 118.50, or just right underneath that, and to see if we can catch any continuation on the upside, maybe some lower run on the dollar. But this is a bread and butter type formation, and how you're trading the market maker buy model on a 1 and 5 minute chart, just using daily bias and the higher time frame PD arrays. And it's, again, trading off of that 118.40 and 3 pipettes, which is consequent encroachment of the daily fair value gap on the euro dollar. Almost 11 o'clock. So profit taking is going to come in here. So we have a little bit of an imbalance around that 118.57, 118.56 area with a bullish order block. So the market could trade back down into that, rebalance that, and close off the day. Or it can rally on and trade up into that 118.80. At this point, it won't make any difference to me because we would have banked the majority of the positions that were assumed for this intraday bread and butter New York session. But notice how it's 11 o'clock, or almost 2 minutes after 11 at this moment, and we have swept the area where there was clear equal highs, not by much, but you're going to train your eye over time to see these. And now you can see clearly it's a market maker buy model, and it's running completely up into where the buy stops would be resting. It's not a lot of pips. It's not a lot of excitement. It's boring trading, very, very predictable types of price action moves, and sticking with that idea that potentially the dollar index could move lower. But we don't need it to trade to new highs in the euro to be profitable. Notice that. I didn't need to see the London high taken out to find profitability. That's key when you're developing and finding consistency, and it builds longevity in your career. So hopefully you found this one insightful, and I will touch base with you again with another example.